because a lot of times our church treasurers are elected into the position but have no idea what they are doing. So that is the purpose of this workshop. So we're going to kind of go through some of the duties and what the church treasurer should be looking at and involved with. So the first thing is that the church treasurer is involved with the financial activities of the church. And those are
over here.
Varied. The financial functions include offerings, investments, endowments, loans, grants, personnel, insurance, risk management, taxes, which are local, state, and federal. And each church has its own unique characteristics. And the financial requirements within the church is a starting point for development of procedures for handling and reporting the financial information which are specific to your church needs.
I have another one.
This is a position which is required by PCUSA Book of Order GJ 3.205, and that gives directions to the church session for church finances, which includes the election and responsibilities of the church treasurer. The session shall elect a treasurer for such a term as the session shall decide and supervise his or her work, or delegate that the supervision is given to a board of deacons or trustees. The responsibilities of the church treasurer is that there are corporate responsibilities. The state allows churches to form a corporation, and the Book of Order G-4.0101 directs that a church should be incorporated whenever permitted by civil law. And in accordance with the state law and the bylaws of the church, they include the role of the treasurer at the corporate level as an officer of the corporation. The corporate treasurer may be different from the congregation treasurer, but the corporate treasurer has the responsibility to comply with federal, state, and local laws as they regards to the reporting of financial information. The corporate treasurer may also consult with the clerk of session to create or maintain the current corporate status for the church. Now, the corporate treasurer is an officer of the corporation, and as an officer of the corporation, that person has exposure to liability in the event of lawsuits against the corporation. Lawsuits against religious organizations are becoming more common, and the corporate treasurer should insist that the church has officers and directors' insurance coverage to minimize the liability risk of the corporate officers, not just the treasurer, but all corporate officers. And the corporate treasurer is accountable to the body by which it was elected, whether it is the session or members of the congregation. The qualifications for a church treasurer, they, as mentioned, are one of the elected leaders of the church. They should be able to work cordially with people, definitely have a knowledge of financial processes, but may not be a financial person, but they are familiar with the processes. The character of the treasurer should reflect the highest in Christian ideals. The experience and background of the person holding this office should give confidence to the church members that the financial affairs of the church will be carried out in a fair and trustworthy manner. person selected, as I mentioned, should have a knowledge of accounting procedures, but it's not necessary if they don't have that, but they should have a willingness to learn to be able to function in their treasurer capacity. And it is also important for the person elected to the church treasurer monetarily support the church through regular tithes or offering, showing good financial stewardship. The length of service of a church treasurer is not one that is mandated by any of the requirements by PCUSA. And it's left up to the church to develop this length of service within their bylaws. And there are several different options that a church may use in determining the length of service for a treasurer. They can elect the treasurer for a long term, and in this way it can be beneficial for the church for the same person to serve as treasurer for several years. Long terms of service may provide more stable leadership, continuity of financial program of the church. However, if the church wishes to comply with the PCUSA recommended term, length of term, that service should be 3 years and serve no more than 2 consecutive 3-year terms for a total of 6 years. An alternate is to elect the treasurer on an annual basis. This gives the session an opportunity to examine the work of the treasurer, and if there is a problem with the quality of work, that the appropriate leaders will be able to discuss the situation with the treasurer and set in motion a procedure to improve the quality of the work. And if the treasurer does not wish to comply with the recommendation for improvement, then the church may choose to elect a different person to that position. However, there is a disadvantage to an annual election, and that is the possibility of inconsistency in work performed due to the frequent turnover in people filling that position. The duties and responsibilities, length of service of the treasurer's role are important to be included in the bylaws of the church, in addition to the responsibilities of the corporate treasurer according to state law. Now we look at what is the work of the church treasurer. The principal function of the church treasurer is that they are responsible for the proper receipt, accounting, and disbursement of church funds within policies established by the church for adequate financial control. The treasurer's work is primarily focused on financial records and payment procedures rather than handling of cash. In some churches, this duty is assigned to staff or to others who work regularly with the church financial matters. The general financial responsibilities include keeping accurate records in appropriate journals of all monies received and disbursed, reconcile monthly bank statements and correct ledgers as needed, sign checks in accordance with church policy and procedures, make monthly and annual reports to the church. If the church has a committee to oversee the financial matters of the church, the treasurer should also make regular reports to that committee. Prepare and maintain records of individual contributions. Prepare and distribute contribution statements. And suggest possible investment opportunities. Overall, they must instill and preserve a high financial confidence throughout the congregation. And also, it would be helpful if they train an associate treasurer selected by the church to also take over some of those duties or to be able to step into that elected treasurer's position. The working relationship of the treasurer is that they are an ex officio member of the Church Finance Committee, and they are assigned to oversee church financial policy and procedures. They confer with this committee in recommending and establishing policies related to receiving, accounting, and dispersing of church money. They receive a copy of the deposit slip or summary from the counting committee. They work closely with the financial secretary in maintaining records of individual contributions. So this is one of those separations where you may have a financial secretary do contribution tracking, or your treasurer would also be able to be that person. Just depends on the church and how they want to set this up. They confer with church staff members in sessions to maintain communication concerning the financial matters of the church. They work with staff members, officers, and organizations in administering financial details of church projects, such as if you have mission projects, youth ministry projects, any other type of mission projects. They are to be a financial advisor to committees and groups so that they can determine whether they are handling their funds correctly or not, because a number of church organizations will have different groups such as deacons or Sunday school, church, Christian education, women's ministry that handle their own funds, but the treasurer overall is responsible for maintaining the accurate records. So we come to the primary recording responsibility, and that is, just as I said, to keep the accurate financial records of all funds identified within the church, and with safe record retention as a top priority. One of the record-keeping responsibilities of the church treasurer is the recording or overseeing of all the receipts. Additionally, the church treasurer is also responsible for overseeing all the expenditures. Part of those financial records include these categories of revenue and expense, investments, and contributions. The financial records should be as simple as possible, and the method of processing the financial information is determined by the complexity of the finances, as they needed to be whether a simplified version or a complex version. Now, one of the things that I want to point out here is record retention. And how many have heard of the Sarbanes-Oxley Act, 2002? Now, there is a couple items within the Sarbanes-Oxley Act which was put into place because of highly publicized misconduct of several large corporations in handling financial and corporate record keeping. As a result of these high-profile cases, these two portions of the Sarbanes-Oxley Act of 2002 affect all organizations, public, private, not-for-profit, which includes churches. So Section 8.02A makes it a crime to knowingly alter, conceal, cover up, destroy, or falsify documents or records to prevent documents from being used in a legal proceeding. And in order to do that, they have what is called the record retention policy, so that all organizations must have a record retention policy so that they do not have a lot of problems when it comes to these legal lawsuits as far as document discovery. If you have a policy where it says after 7 years you will destroy these type of records, and in a legal proceeding you have that policy in place and adhere to it, then that claim doesn't have any legal standing for anything prior to that. So this is one of the reasons why it is crucial that all organizations, including churches, have a record retention policy. The Presbytery has one, a record retention policy, which is on the website if you want to take a look at it. But in your handout, in the booklet that I have given you, in the back of it, is also a record retention policy schedule. As mentioned, the treasurer is also responsible for the contribution records. That means that they keep track of all of the member and attendee gifts, the tithes and offerings, anything that may have come in that is of a tangible nature. Now, one of the things that we must recognize is that a person that is filing an itemized income tax form cannot use their canceled checks as verification of donations. The church must give them a statement of contributions in order for that person to be able to claim it. Now, saying that, the church is not required to present that, but it is good practice that the church give those statements out. And you need to provide an itemized statement, not just a general summary, but an itemized statement of contributions received by check or cash. Now, this does put a little bit of burden on the church treasurer in those contribution statements. Must be itemized check number by check number, so that, and the amount. So if you have someone that puts in a check into the offering plate once a month, you would have 12 line items showing the date, the check number, and the amount. If you have somebody that gives gifts in pledge envelope by cash each week, you must put down how much each week that cash amount is. And you can't just say for the year they have given 200, 250. The IRS is getting very picky on this now. So in general, you must itemize your statements when you give them out. Yes, that is so that your donor, those that have contributed, can claim it as a charitable donation. So in your written contribution, you need to include the name of the church, the amount of cash contribution, which is currency, coin, or check, and as I said, itemized. And then in the statement itself, you must include the statement that said no goods or services were provided for your contribution other than intangible religious benefits. Now, at some point in time, you may receive, the treasurer may receive contributions that are of a tangible nature. It might be books, it could be stock, Those are the type of things that you acknowledge that you've received them, but you don't place a value on those. In your contribution letter, you just say, we have received these books, and you can list them from so-and-so. And then it is left for the contributor to assign value to that. It's the same way with marketable securities. If marketable securities were given, you don't assign a value. You just said, we've received 100 shares of this stock on such and such a date, and then it's left up to the individual to assign a value. They will have to go back to their stockbroker or financial person for the determining what the value is on that day of the gift. Now we go into actual financial operations. We're going to be looking at bookkeeping method, fund record keeping, and bank reconciliation. So the first one, as I said, is the bookkeeping method. There basically are two types. The first type is called the simplified method. And this is where revenue and expenses are recognized with the exchange of cash. This is a typical, very small church type of system. They work on what is called the cash basis type of system. And they use only a cash receipts and cash disbursement ledger and reconcile those with the checkbook each month. Now, the next one is the complex method. And this is the use of receipts and disbursement journals, which are then posted to ledger accounts in a double entry bookkeeping system. This more complex record are maintained by using voucher systems, journals, and subsidiary journals. The transactions are posted to the journals and then to the general ledger, with categorizing each of the transactions from a fully defined functional chart of accounts. The chart of accounts is a listing of all the church transaction categories. It might be your utilities, it could be your office supplies, pastor's salary. Those are the just general categories that you could be using. And the posting of these items refers to the transfer of information from the various journals to the general ledger, which is the summary of all the transactions. The complex method of bookkeeping uses what is called the accrual basis of accounting, where revenues and expenses are recognized in the period in which they occurred. So if you have revenue that comes in on Sunday, that is that period's, that day's revenue, even though it might be deposited later. It's that day's, and that's recognized when it is received. The same thing with expenses. You may have expenses that are incurred for various items. You might have janitorial services, utilities, groundskeeping. And they are on a monthly basis, but you pay those on the next month. But you need to record those in the month in which it occurred. So if it occurred in November, but you don't pay it till December, it's still a November expenditure. And you record these in the various journals for that month, and then it's transferred to the general ledger. There are different ways of keeping record of these contributions because they come in their different type of use of the funds. The use of the funds come under these categories: general or current funds, restricted funds, non-budgeted mission funds, and endowment funds. Okay, I'll take each one of those and go through what they are. General or current funds are funds which pay all operating bills, such as salaries and utilities. General offerings are deposited into this account and always use the primary funds for used in operational activities and expenditures. Restricted funds are gifts received for a specific item or program. An example of this would be a building fund, where the restricted funds are used for specific building projects and must be deposited into a separate fund or kept track of. Restricted funds may have a project or time restriction, and they can only be used for the purpose the donor intends and nothing else. You can't borrow from a restricted fund. They can only be used for the purpose intended. And either by completion of the project or passage of time. Non-budgeted mission funds are designated special offerings, such as the 4 special offerings that the PCUSA has. Also include great hour sharing, Pentecost offering, Christmas joy, disaster relief, extra commitment offerings, and so on. These contributing funds are passed through from the Presbytery to the National Church, to PCUSA mission programs. Then the last item we have are endowment funds. These are gifts that are received which are so restricted that typically only the income that is generated from the principal of the investment can be used. An example of this is if a church receives a $25,000 bequest with instructions that only the income can be used for providing scholarship to members preparing for ministry. The principal portion of $25,000 stays intact, and only the interest, which could be $1,000 a year or however, depending on where it's invested and how the money is received, can be used for the intent that the original donor specified. Now we go into bank reconciliations. Bank reconciliations are reconciling the bank statement to the checkbook on a monthly basis. An easy way to do this is to request that your bank send statements on a monthly basis at the end of the month. Try and ask them to do that. A lot of times when an account is set up, they just if it's the middle of the month, that's where your cutoff date is. You want to request that your cutoff dates are on the last day of the month so that you can reconcile your checkbook, general ledger, all of your cash activities for the month. A preferred method of reconciliation is using a 4-column format. And at the very least, use the reconciliation provided on the back of your bank statements. But this is a simplified 4-column format. It gives a overall look at what has happened during that period of time. All of this information is contained in your little booklet, but do let me know if you have any questions if you do want to try and implement this. You have your bank balance, and what you're doing is reconciling that to your general ledger balance. You're recognizing that you have deposits in transit, perhaps, or also uncashed checks. And So you have a beginning balance, you have your deposits, you have your withdrawals, and then you have your ending balance. And then you record what adjustments you have to get your bank balance down to your general ledger balance. And if you'll notice, and I put in bold, the balance, the general ledger balance at the beginning of the month, the adjusted balances for the bank activity, those are in balance. Those match. So this is how you want to get to your, when you're balancing a checkbook or any other accounts, you want to be sure that your adjusted activity for the bank matches your adjusted activity for your general ledger. Now we're getting into the reporting responsibilities of the treasurer, and they fall into these three categories: financial, governmental reporting, payroll personnel reporting. The first one, financial reports. This is a very simplistic financial report that you would be presenting to session. You would have this for the month of, let's just say November. For the month of November, you've received this much receipts, this much cash has gone out or dispersed, and this is what the cash balance is at the end of the month. And this would be on the cash basis of accounting, so that your cash balance is what your checkbook balance would be. Year to date, you would have, these are the total of the receipts for the year, disbursements for the year, and the cash balance should be the same balance as what is the ending cash balance for the month. The current income, expenses, and benevolences should be reported monthly. Other items should be reported at least annually. And the Book of Order G-3.0205 recommends that the session provide full information to the congregation of its decisions. Therefore, the congregation should receive a financial report on a periodic basis, but no less than annually. Governmental reporting. The responsibility falls on the treasurer to see that governmental reporting regulation compliance at the community, state, and federal levels is also a responsibility they have. This includes federal and state payroll tax reporting requirements, such as the payroll tax deposits, the filing the quarterly federal Form 941, and state reporting equivalent, and the annual Form W-2. The federal, state, and local tax codes determine the method and frequency of the federal information. You can obtain these charts for the federal payment and frequency through the IRS Circular E, which is found on the IRS website. And in addition to that, if you have unrelated business income that the church earns, the treasurer also has the responsibility to annually file Form 990. This is an informational form, and it just shows the ins and outs of any possible taxable income to the church. Now, since these IRS forms can be confusing to complete accurately, the treasurer may seek guidance from a certified public accountant or a tax attorney that's familiar with tax laws that relate to church finances. The treasurer is also responsible for the administration of the payroll and personnel records. So the listing here that should be ones that they are obtaining and filing are the letter of employment of the employee. That could also be a copy of the terms of call for ordained pastors that are called to church. There are background and reference checks that should be maintained by the employees in their personnel file. Information on the date hired, their wages, their exemptions, federal, state, and local, with a current copy of the W-4 form. Now, the W-4 form is one where you fill in your exemptions that you're claiming for tax withholding purposes. One of the things that churches do quite frequently is kind of fill it and forget it, and keep only the original W-4 form in their file, in the personnel file. Those forms have expiration dates. They're only good for 1 year. So a church needs to be sure that their employees are filling out an annual W-4 form so that they are updating their exemptions, tax withholding, and they can see exactly what they should be withholding. So if you have not updated your employees' W-4s, I would encourage you to do that for this year, and certainly going into 2018, get those forms updated. The IRS puts out those forms annually, and they have expiration dates on them. Also, you would be completing an I-9 form. That's the immigration eligibility form. There are special rules that apply to I-9 forms, and they are I-9 forms need to be kept separate from your employee's personnel file. It's a Homeland Security thing, and you may have a separate file in a separate cabinet with the I-9 forms. And then over here you would have your personnel files. You need to keep those separate. Another thing is you do not keep copies of the identification, which is the verification of who these people are, like a driver's license, a passport, or any of that information. You need to be in compliance with secured identity laws, and that is not keeping that information with that form. Another thing that has come up more recently is health issues. You must keep your medical information on employees in a separate file also, so that it is not within their personnel file. It can be in the same cabinet but separate, whereas the I-9 needs to be kept completely separate. That's because of HIPAA laws. And so if anybody has like a doctor's authorization to come back to work, that needs to be kept in a separate file. Those are the type of things. You also the treasurer keeps information on benefits and forms that need to be completed for those benefits. Set up a new hire for payroll processing, whether it is done in-house or through a payroll processing service. And you need to keep track of personal leave days. It might be vacation days, it might be called personal leave days. You also would have sick time days. State of Oregon now requires that all employees have specific sick time allowed to them. So you need to be sure to keep track of all that. And time cards. This is an absolute. State of Oregon requires that all employees, doesn't matter whether they're exempt, non-exempt, all employees must be filling out time cards of some type. And This is just for discovery purposes. If the state comes in to audit payroll records, that's one of the first things they will ask. So if you have a pastor that goes in and out all the time, how do you keep track of that? Okay, the easy question on that one is you provide a time sheet, time card that is only record time away. That means you have a timesheet with dates, and when a pastor or any of your other employees that you don't have time cards for, other than the hourly workers, they can just put the time they are away, which means you record their vacation time, their sick time, their continuing education time, time away. And it is assumed that they are on the job, their normal regular work hours from that time forward.
That's just applied to pastors, right?
It would apply to all all exempt employees.
Yes,
So,
everybody who's not paid for X hours a week or.
right, and one of the other things that does get a little bit quirky in here is that you can provide a salary, and I'll kind of get into that if I have time in the exempt, non-exempt section. But even if you pay a salary, it doesn't cause them to be exempt. It would be salary with overtime. So I'll get into that a little bit. Continuing education. Mm-hmm. We have also internal controls. These are processes to make sure that operations run smoothly, function effectively, and that they are also complying with your federal, state, local labor and financial regulations. These are broken down into, you have organizational controls, financial controls, annual financial review, and budgeting. An organizational control basically is a grouping of people working toward a common goal through setting priorities and objectives designed to effectively achieve the organization's goal. A church must design an organizational structure made up of various organizational components, peoples, and programs to perform the work. Each component in the structure has a specific duty, responsibility, and authority to enable meeting organizational objectives and goals. The treasurer's function in the organization is to effectively and efficiently control the financial resources of the organization. So there's a lot of different components in organizational controls, which finance is only one of them. You might have part of your control is how do you do mission? What type of ministries are you supporting? So that you can effectively meet the vision and mission of the church. Specifically, now we're looking at those financial controls. Those are the checks and balances of an organization's financial system and processes. And there's the list up here are some of the processes for financial control, but they're not all of them. It's not limited to just these items. You have segregation of duties. That means you have your check signer is not the same person that receives the money. You have transaction authority, so that you have a person that will approve an expenditure from the person that is issuing the check. There's a lot of these different controls so that You might have $1,000 expenditure. It might be, let's just say, to repair the furnace. You need to have somebody approve that before it goes through the process of being paid. Somebody in authority has authorized that to be done, not just saying, oh gosh, the furnace needs to be repaired, let's get it done with and pay it. You need to go through the process.
So, for example, if we needed to spend $1,000 on the furnace, we might be in the job description of the Buildings and Grounds Committee.
Yes.
That the chairperson would authorize that. Is that?
Yes.
Yeah, okay.
Absolutely. It might be a committee chair, it could be a higher up supervisor, those type of things, so that not just your one employee or one person. It might be a volunteer. If you have a volunteer doing these functions, goes ahead and does these expenditures without having a prior approval. That's what we're talking.
Since the session is the governing body, and usually the session is comprised of committee chairs, ordinarily it would be a ruling elder
Yes.
kind of person that would be
Right.
signing off.
Absolutely. And it might be that the authority might be the session, that these expenditures cannot be paid without the authority coming from session. So it's left up to the individual churches, set up in their bylaws typically, how these processes are to be worked. The financial control also includes looking at bank and financial statements, investment statements coming in, looking at the transactions for reasonableness, so that you're not looking at something is in the bank statements going out that you don't have any idea what it is. Or investments. There might have been an investment made that was deposited for restricted contribution. You need to be aware of that investment coming in. Secure your property. That means if you have instruments, sound equipment, computers, any type of electronic equipment, you want to be sure that the property is secured in some manner so that it doesn't walk off. So you're responsible, that's an internal control, a financial control, because there's a cost associated with the dealing with the securing of these assets. We already talked about document retention. And that is part of your financial controls, because a lot of the documents that are generated have a financial aspect to them. They might be canceled checks, it could be your invoices, as I said, whatever the policy is that has been developed for the length of time to keep those documents, and then they're destroyed. You want to be sure that you're adhering to that document retention program. And document retention also includes your electronic versions of documents. So your emails that are being sent back and forth. If they have relevant financial information, might be personnel information, you want to set up some type of a policy which includes emails, or if you have any other electronic storage. You might be using cloud storage providers. Just send it up to the cloud. You need to be able to include that as part of your document retention. Numerical sequencing. One of the things that the treasurer will need to review is those checks that have been distributed. When the bank statement comes in, make sure that all of those checks are in sequence, that those are accounted for. Or if you use purchase order or requisitions, you want to make sure that you have those in numerical sequence and they are accounted for. One of the things that I often say as far as checks, do not destroy your checks. If you make a mess, you mess up on writing one, you will just void it, write void, and put it in your file of canceled checks or information on canceled checks. That way it's accounted for. There might be times where you send a check out to somebody, a volunteer, for reimbursing for an expense, and they don't cash it. It just sits there and sits there. The banks typically have said that anything over 6 months old is considered stale dated and would not be processed. Well, they do it anyway because they are so big they can't keep track of it. But anyway, they're supposed to not process anything that's over 6 months old. So that check would need to be reissued. And the person will say, well, I'll just tear it up. Don't let them do that. Ask them to write void on it and send it back to you. That way you can keep track of that numerical sequence check. Now, the banks are going to process where they do not send back the canceled checks any longer. They may send you a listing of checks that have been processed, a picture of it, and you can keep your voided checks with that, with your bank statements. It's just another way of keeping track. Make sure that a check doesn't go missing. We've had instances where they have, and they've been cashed by another party. Embezzlements have happened, malfeasance. So this is a way to keep track and minimize the risk of that happening. Budget review. This person, that's the treasurer, will want to definitely look at any of the budget discrepancies that are pretty large from actual. This is a way you can tell if you are really processing according to budget. Your income is coming in similar to budget, your expenditures are coming in similar to budget. Now we're getting down to more of the nitty-gritty, the annual financial review. This is mandated by PCUSA under the Form of Government section, the Book of Order, G-3.0113. It says a full financial review of all financial books and records shall be conducted every year by a public accountant or committee of members versed in accounting procedures. Now, such reviewers should not be related to the treasurer. And additionally, both the PCUSA Book of Order and the Sarbanes-Oxley Act point out the necessity of either an audit firm having the requisite skills to handle the audit, in this case specifically audits for churches, or a financial review committee that is used and from those members that have financial expertise and understand the church finances. They will look at several different things. And one of the things I want to point out here, financial reviews are not audits. Audits can only be conducted by CPA firms because they have to sign off on them. Financial reviewers will look for the reasonableness of the financial data and the processes that the finance information flows through. The benefit of a financial review is that it gives the congregations assurance that the finances, the monies, the funds that they contribute are being handled appropriately.
What kind of report are we envisioning
Yes, you should, at the very least, the Financial Review Committee should submit a report to session that outlines, we have reviewed the financial records of such and such church and have found them to be in good condition. If you find errors, you want to list those errors, and then for your annual report to the congregation, you basically would just have to say a financial review was conducted on such and such a date by this committee, and name the individuals on that. I have another workshop session specifically for financial reviews and have some of the sample reporting on that. If you want some of the information on, just send me an email and I can get that to you. So some of the records that are needed for a financial review are listed here: chart of accounts, check register, bank statements, copies of deposit slips, accounts payable journal, vouchers, invoices, payroll journal, payroll tax report. These are just a listing of some of the items. There are quite a number of items other than listed. This is just a sample that should be looked at. If you want more information on the financial review process, get with me. As I said, I have done workshops on financial review. In fact, I did one just last week on that. The budgeting process, okay, here we get down to that dreaded budget. However, PCUSA mandates that under the form of government, financial section G-3.0205 of the Book of Order, that the session shall prepare and adopt a budget and determine the distribution of the congregation's benevolences. Budgeting is just a process of allocating resources, whether they're financial, human, or assets, toward a goal developed by the church's vision and mission statement. It's simply a series of future estimates based on past data to be used as a guideline for future revenue and expense. It's just an estimate, it's just a guideline, it's your best guess. These are not real dollars. And if the revenue doesn't come in as expected, then the budget must be revised to account for that. Because the last thing you need is your children's ministry saying they have this much money and they just go ahead and spend it, but the money just doesn't come in. You will need to, on a regular basis, monitor budget to actual and make any adjustments necessary as you go along throughout the year. So, the question here is, why do we want to do the budgeting? Since it's time-consuming, it's difficult, it does not reflect actual spending, it's rigid or controlling, it's just basically accounting crystal ball gazing. So the advantages are that planning, it forces people to study the past in order to develop plans for the future based on historical trends and organizational goals. It reduces erratic spending. It aids in eliminating emotional pleas for funding by finance committees, by forcing the committees and task groups to live within the funding constraints of a group budget. Performance evaluation. Budgets provide a foundation to review and evaluate the financial impact of meeting organizational goals. It is
as we had mentioned before, it's a financial control. Any variances in budget to actual that are significant must be investigated, and corrective action would need to be taken to keep the leadership on target with meeting those goals and the organizational processes. It provides communication and coordination. It serves as a method to coordinate and integrate the financial results to committees and task groups for the evaluation of the effectiveness of those goals and objectives. It gets members involved. It allows members to share ideas, thoughts, and opinions during the budgeting development phase. And by participating in the budget development process, there's a feeling of ownership in this. It gives a commitment to giving. If your congregation members can see a goal and the budget that would be able to get to that goal, they feel more committed to giving to reach that goal. It gives confidence in church leadership that they are actually keeping track of how things are operating and the direction that the church is going. It would provide an operational surplus or deficit. It keep track of that. Is your operational deficit or surplus within your budget? Are you budgeting for a deficit? Are you budgeting for surplus? Are you actually budgeting a zero, an equal-based budget? And then it lends for prudent lending and borrowing, so that oftentimes if you go to a lending institution to ask for a loan, you might want to do some expansion or remodeling, that it allows the bank to be able to see where the congregation is going, what their finances are. And many times in a lending situation, bank will ask, I want to see not only your last 3 years financial statements, I want to see your last 3 years budgets. That way it tells them how realistic your budget is to your actuals. So we've talked about these budgets here, and there's different ways of doing budgeting. The line item budget is one that uses the allocation is developed for anticipated expenditures for the ministry program. So you have your line item would be this ministry, children's education, women's ministry, the choir, those type of things. It uses an incremental approach to determining budget amounts by basing the budget funding allocation on prior year's budget and making adjustments to those line items for any anticipated changes in revenue or expenditures or activities even. The ministry-based program it allocates the budget based on the ministry. We want to see for this year more money going toward youth ministry rather than going toward more of an outside mission. So it's ministry focused, and it may be different from year to year. It operates on the principle that programs achieve specific aspects of the organizational goals, and clearly defined criteria is established to determine the effective use of the limited resources available. So it gives you a focus on reaching the organizational goals. Zero-based budgeting, it's where everything starts at zero the next year. You don't use any past data other than this is the amount of revenue we've received, this is what we expect to receive, and then you base that next budget on where we want to go. How much are we going to put into each category? This is a very time-consuming process, and it's recommended that if you do go to this zero base, wipe everything out and start all over from scratch, that it be implemented maybe once every 5 years, unless the benefit of it exceeds the cost of doing it, because it's the most costly to implement, because you've got to basically redefine what you're going to be doing for the next year. Now we come down to our personnel. And personnel is probably, as in most churches, at least half of the church's expenditures are for personnel expense. And since this is a substantial portion of the church's expenses, it becomes imperative that the treasurer have an understanding of the effective handling of personnel expenses as part of the financial operations of the church. We'll start off here with teaching elders or ministers as employees. And there's specific rules that apply to teaching elders. They are a member of the Board of Pensions when they are called to a church position. The Board of Pension provides the minister members with health insurance, pension, death and disability coverage. There is also optional dental, additional death and disability coverage. And there may be considered part of their terms of call, or it might be of what they are expected to pay, these additional optional benefits. They must submit an annual form, ENR 111, which is a member change form for any changes in updated salaries or status that must be submitted to Board of Pensions. Rebecca, can you tell me what time it is? Okay, thank you. My watch has stopped. Okay, so the Board of Pensions has moved toward a more electronic version of this, and it's a little bit cumbersome. That's my way of thinking, but they're working through it. So a lot of this information now has to be downloaded and then filled out and then submitted, and then other information for your pastors, any other employees that have benefits through Board of Pensions is handled through a portal called Benefits Connect. So it has been my experience that you need to really go in and find out what it is you need to do in regards to that, because some of the information can be filled in online, others you have to download the form and then send it in. So it's kind of a mixed bag right now. So I would encourage you to have your treasurers, or as treasurers, look into that process and exactly what it is you need to do, either online or by paper. It's kind of mixed now. The pastor is what we call a different animal, because he's both an employee, but he's also self-employed. He's employed for federal tax purposes. The state of Oregon considers a pastor an employee for workman's compensation and also for unemployment considerations. But they're self-employed for their Social Security and Medicare, so that's completely handled separately. So need to be able to determine just exactly where, when a pastor comes in, where they are being compensated or how they're being compensated. However, because they are considered self-employed and they are not required to have taxes withheld, you may ask your pastor if he would prefer to have taxes withheld, and then that can be reported. Sometimes it is easier for the pastors to just have taxes withheld and report it on their quarterly basis. Pastors have a housing allowance, which is non-taxable. However, I do have to warn you that at this point, that federal judge in Wisconsin has ruled that housing allowances are unconstitutional. Now, it doesn't affect all states right now. It's just affecting the states around the Great Lakes area, Wisconsin, Minnesota, and such. But it's a federal ruling that could have implications going forward. It was a legal suit or claim that was filed by the Foundation Freedom from Religion. However, the federal courts have decided that this organization has no legal standing. And in the past, when this organization has filed claims and the same federal judge has ruled in their favor, that the appellate court for the federal district has overturned that. So it's one of those things that you want to stay tuned for because it could have an impact in the future. It will probably end up at the Supreme Court level, but in past actions, the Supreme Court has kind of held that these particular exemptions with religious organizations still hold. So, but I just wanted to keep you informed and kind of stay tuned on that. Effective salary. The Board of Pensions, in determining their pensions and health care benefits, use what they call effective salary. And effective salary for Board of Pensions purposes is annual cash salary, housing allowance, the SECA allowance in excess of 50% of estimated liability, any deferred compensation, manse value, and other allowances such as unvouchered auto allowance, medical deductibles. So the Board of Pensions has a little booklet that's available that can be downloaded off of the Board of Pensions website called pensions.org. They don't provide the written booklets too often anymore. Most of this information they provide as being downloaded. Now, all staff considerations, we talked about ministers, are all staff, is that you need to prepare a W-2 for all employees. That includes your pastors. And a number of years ago, the IRS disallowed pastors receiving 1099s. So now they're considered employees and they receive a W-2. And the treasurer has the responsibility to see that those W-2s are prepared and reported. No, it's not a requirement right now, but right, yeah, they will provide if you have you with that information, but it's not required at this point. Now, going forward into 2018, 2019, it was going to look like it was reported. We don't know where that stands right now because everything is still kind of up in a turmoil. Well, it's another one of those, stay tuned. No, but your housing allowance is, and that goes into box 14. Yes. So you also need to include the imputed value of life insurance if excess of 50,000, so that if you have through the Board of Pensions, the life insurance is automatic type of thing that you have. It's based upon a percentage, so that anything over that 50,000 would need to be included as imputed value. Yes, it's for all employees. So if you have someone that receives over 50,000 life insurance premium benefit, I mean, it's a benefit that the employer is offering. They give you a calculator that in their website that you can calculate that amount. They won't tell you what it is, but you can use their calculator because it's based upon age and the amount over 50,000. If you provide a cell phone, it was prior to 2010 considered taxable, but in IRS Notice 2011-17-2, it provided guidance to employers on the use of employer-owned cell phones for employees. So you need to be kind of careful on that one because it's still, if you allow the employee to use the cell phone for personal reasons, that could become taxable. But for right now, it's treated as tax-free without burdensome record keeping. So it says this calls for business, this calls for personal. No, that doesn't happen. But if you do provide one and that person uses it almost exclusively for personal use instead of business use, you need to be aware that there could be taxable consequences with that for the employee. If you have an expense account reimbursement, you would want to have a voucher system where you pay reimbursing for those expenses. One of the ones that we see frequently is auto allowance. If you allow, let's say, a certain amount, $2,500 a year as auto allowance, and that's paid out on a monthly basis to the pastor, that is considered taxable income. So you want to be sure that everything that's being paid out is on a vouchered reimbursement system. That way it becomes an expense for the organization and not taxable to the employee. The last one is exempt, non-exempt. This is a fairly big area. There were some changes that were going to be effective last year, December, but a federal judge put a hold on that. And it's just been real recent that it had been determined for right now that any changes were not going to be taken effect. In your handout, I have not made the correction on that. The slides have the correction. So we're looking at who is exempt, who qualifies for overtime pay. An exempt employee from overtime pay, if they meet the exempt requirements of a weekly salary of $455, that put back to what the old one, which goes back to like 2002 or something like that, and they meet the duties test. A non-exempt employee, they are eligible for overtime if they work over 40 hours in any one work week. Now, your work week can be anywhere from Monday through Sunday, Wednesday through Tuesday. It's whatever your normal work week is. So, kind of to put this in perspective, let's take a look at who is an exempt employee. There are 3 categories that we're concerned with, basically. They are executive, administrative, and professional. There is one other category called computer professional, but we don't see that very often in a church environment. So I usually don't go over that one. So how do they qualify, these 3 categories, as exempt under the, we call it abbreviated under EAP, Executive Administrative Professional categories? They must pass the salary test first, as I said, $455 per week. The executive will primarily manage a distinct unit or subdivision within an organization, spend most of the work week performing management duties. This generally means more than 50% of the work time. However, other factors might support exempt status if less than 50%. Other factors that they must meet, we have mentioned the weekly minimum salary. They supervise 2 or more full-time equivalents employees. That means you can add your employees together. If they're half-time, it would be 4 employees at half-time or 2 full-time. I mean, that's how this works. They must have hiring and firing authority and make decisions significant to the organization. So this is the duty test for an executive. Most of your pastors would fall in under this particular category because they would be basically a head of staff and have kind of the hiring and firing authority, but basically would be given to them through a personnel committee, most likely. The next session, yeah. However the church environment is. So the personnel committee is through session. So the next one is administrative, and they perform office or non-manual work, which is directly related to management policy or general business operations. They spend 50% of their work time performing management duties, and they meet the minimum weekly salary, $455 per week, and they also exercise discretion in making judgments that are significant to the organization. So you may have your administrative secretary, most likely would not qualify, but a lot of times would be put in under an exempt category because they don't do all of these different functions. So you have to be really careful on your administrative employees, whether they are considered exempt or non-exempt. The last category we go through is professional. And a professional category, their work performed requires advanced knowledge, which is predominantly intellectual in character and varied, rather than routine, manual, mechanical, or physical. They must have knowledge that's been acquired from extensive or specialized instruction over an extended period of time. And their work is characterized by imagination, creativity, originality, or exceptional talent in fields of advanced learning as it relates to creative professions such as music or art. And must meet the minimum salary requirements. Okay, one of the ones that we see quite frequently that is being mishandled is your church organist or pianist. You're going to say, we pay you $500 a month. And as I mentioned earlier, you need time cards in all people. Your organist or pianist would typically not qualify even under the professional because they're not getting the minimum $455 a week. They must be considered non-exempt, and that means that overtime does apply. So you want to be careful in those categories. If you say, we are paying you for, let's say, 2 hours on Sunday with an hour per week of practice time, that's a typical 3-hour week. That's what their work week is considered. If they have to practice another hour for special music on the next Sunday, they need to be paid for that. So there is some give and take on that. They need to be preparing time cards, and they need to keep track of their hours. This is nothing new. It's just one of those areas that a lot of churches have been in non-compliance. Yeah. There's no time. For example, it's salary. It's the salary, $455 per week. So if they're only getting $150 per week, they don't meet the minimum salary requirement and must be considered non-exempt. Mm-hmm. Whoops. If by 11:30, yeah. Okay. Let me just go through these real quick. That's why I wanted to keep track of time. The salary tests, what we're talking about, the time issues. There's regulatory guidance. It's in your book. The FLSA, which is the Fair Labor Standards Act. What is interstate commerce? The ministerial exception. Record keeping for both. These are the references. There are a couple other items in here having to do with unrelated business income and IRS Form 8822B, which must be filed. 8822B must be filed whenever there is a change in a responsible party. It could be any of them. It could be if you consider your responsible party, your clerk of session. It could be the treasurer. It could be a trustee. And there are additional resources that are listed in the back. Okay, so that is all I've got for right now so that we can get done on time. But certainly, if you have any questions, let me know. You can call me up at the Portland office or email me, Cheryl at cascadespresbytery.org. They're all in the booklet. But if you want more information on that, just let me know.
Thank you, Cheryl.
Yeah. Did you